Hello everyone. Yes, good afternoon. So today is 13th of February 2019, and first of all, my name is Graham and I'm going to take you through how to find the best trades in the forex market. So this is going to be our plan of work. First of all, the most important thing we're going to look at is we're going to focus on long-term trends. How can you locate long-term trends? And we'll achieve that by first looking at finding trending market using the indicators. Then we'll use also price action slightly to see if we can find good trends. Then the next one is we'll look for candle patterns that are in direction of the dominant trends. So with this, we are going to look at pin bars, engulfing candles, and inside bars. Then the last one should be strategies that are good for long-term traders. So I've only mentioned two here, which is dark cloud traders and also breakout, but we'll look at tons of others as we continue. So let's start off immediately. Let's look at first of all the first one. So what's a long-term trend? We'll start off with the main chart. This is a chart. How do you know that the trend is upwards or the trend is downwards? So there are only two trends that we have in the forex market. Either the price is moving up or it's moving down. Just a second, we load this. So these are the only three cases. Either the price is going up or we have a trend to the lower side. Then there are times where you cannot find the clear trend. You will find something like this: price goes up, then it comes down, it goes up, then it comes down, then it goes something like this. This is what is called consolidation. There is no clear trend. We are not going up and they are not continuing to the lower side. So anytime you find something like this, like you cannot find a clear direction, the best we need to do is to remain flat. So I'll try to explain that with the trend. We see exactly where we expect price to be consolidating and when we expect price to continue to one direction. Just a second. So this is how our price moves. In an uptrend, price will spike up and then you'll see some slight retracement. Then you'll see a similar move even higher. Then you'll see a slight retracement. Then you'll find also cases where it moves up and then it retraces to the lower side. Then maybe at the top of that trend, just when the trend is coming to an end, you're likely to see something like this. The price will start consolidating. So consolidation does not mean that the trend is coming to an end. It only means that there is no clear direction. We are undecided whether to continue up or to reverse to the lower side. You will see something like this. At the tip of an uptrend, you will see some form of consolidation. And anytime you see anything like this, ensure you mark the boundaries where it's the maximum it goes up to and the lowest it goes up to. So expect price to remain within this range, and in case it breaks to the lower side, then that means the uptrend is ended. And on the other side, assuming the price, instead of breaking to the lower side, it breaks up at the top of this one, then that means we are continuing to the upper side. So this is one way you can read trend. You can either choose to trade only when price breaks above this consolidation, or trade this. Price goes up, then it retraces, you pick a buy. It goes up, it retraces, you should pick a buy. Then it goes up, it retraces, you pick a buy, but in this case it begins to consolidate. Anytime something like this happens, just know that either this trend is coming to an end or it's reversing or it's continuing to the upper side. And the best way to ensure that you are right is to wait for a break above this one. We have a zone here. So if this was a trend up, then somehow in the middle of that trend you begin to see consolidation, and instead of reversing, it breaks above the highest point where there was that consolidation, then that's a sign you're continuing upwards. The best you should do in that case is to wait for price to extend even higher. Then in case it retraces back to the same place, then that is the best time to look for a trade. So this is in a trending market. Anytime the market is trending, you need to watch for retracements. look for proper retracements. And if you notice that the price is consolidating, then don't just enter a buy or a sell. Somebody will come here and then pick a buy, then sell at the top, pick a buy, then sell at the top. No, wait for price to clearly either break above it, then retrace back so that you sell it, or the price should clearly descend below the same level, which is, in this case, this is 1.4436, so that you can pick a sell, something like this. So you may either wait and buy there, or you wait and sell there. So whatever the example I've looked at, this is an uptrend. How about now when the price is in a downtrend? Something like this. So price does not move like this normally. You don't just get up from this point and then you go down straight away. No, it will move down and then you find retracement. Then it continues even lower and then you'll find retracement. Then it should proceed even lower, then you'll find another retracement. So how do you know that this trend is coming to an end? How do you know that this downtrend, whatever we are seeing, is actually coming to an end? The secret is this: just ensure that you begin to see something like this consolidation. You'll find that instead of making a lower low, the price begins to come back up to where it was retracing up to, but it does not break above it. You see things like this consolidation. So as I've mentioned just some minutes ago, that anytime you find consolidation, just mark the boundaries, the highest place that consolidation going up to and the lowest place it was going up to. Then if the overall trend was downwards, you need to wait for price to break below the lowest place. Then you wait for a retracement before you can pick a sell. So this is just exactly the same way I was referring to the uptrend. It's the same reasoning I'm using now on the downtrend. So you find a move down, price goes up, it moves down, you find a move, it retraces, goes down, then it retraces. All this, you're likely to see consolidation in between this trend, this retracement, you're likely to see a consolidation. Then you also have this one, where you'll find consolidation. Then when price proceeds down, you're also likely to see consolidations there, and you'll also be able to find consolidations here. And as I've mentioned, don't just sell anytime you find this consolidation, you should not sell anything in between or buy anything. Wait for price to break out of it. Like as I've mentioned here, you'll find this, the entire place, which is this, is consolidation. Once you have a line here and you have a line on the lower end, you should wait for price to go below it, retrace back to that point, then you pick a sell. So notice, despite the fact that this is a good buy, I'm not buying it. This is a very good buy, I'm still not buying it. And the reason is simple: the overall trend here is downwards. We have the trend which is down, so we don't want to buy against whatever is happening overall. We have a trend that is downwards, so anything you're doing on this chart has to be downwards. So there's another thing which I've not mentioned, that anytime the price goes down, it attempts to come back and it forms some high. This one, you'll find that this is the highest place. It goes down, then it forms some high, it goes down, comes back to some place, and even this is now a lower high. Then it proceeds down, it comes back up, we find another lower high, then it goes down, the same high, the same high, the same high, it proceeds down, then it starts to come back up, and we find even a lower high. This one. So assuming you're looking at this chart and you realize that anytime the price attempts to pull back up, it forms a lower high. Anytime it attempts to come back, you find that this high has even gone lower. It proceeds down, retraces up, and this is a lower high. Then we see it continue down, it proceeds up, and this is even another lower high. then it proceeds down, then it's the same high, the same high, the same high, it goes down, and we find another lower high. So assuming you're just trading price action, you don't use indicators, then observe things like this. Look for cases where the price is in a downtrend. You should look for cases where the price is making lower highs. It attempts to come up but does not do anything. Instead, it goes even lower. It attempts to go up, and instead of doing anything, it goes even lower. The same way. So anytime you observe something like that, the price is making lower highs, it means the trend is downwards. We are continuing to the lower side. You're supposed to look for a sell. I'm going to look at a real chart, Euro USD, and I observed that on the monthly chart. Here, just look at this chart properly. This point, from this point here, this was 2007 until now, there's a higher high which was formed here. Then I draw my line like this. This is the highest high. Then we see a move down, then price tries to come back, and instead it forms a lower high. Then it proceeds down, it comes back up, and it forms another lower high. Then it goes down, comes back, but does not reach that trend line. Instead, it proceeds to the lower side. So all these are indications that the trend is downwards. You're supposed to look for a sell. This is higher high. And then we have a lower high. Then we have this one, lower high. And then there's the next one, another lower high. Now what we want to happen now is for price to come back to the same trend line so that we can look for a sell, and even that one will be another lower high. We don't expect it to go above the previous high's high. That one, we are looking for a sell. In case the price can pull back up to this trend line, then that's the place we're going to sell from. This is another lower high. So as I've mentioned, this is a downtrend, and therefore we focus only on lower highs. We want highs that are getting even lower as the price proceeds to the future. So you can see this a foundation, a base, a support, price goes up to this high, then proceeds down, attempts to touch this line, goes back up but does not touch this trend line. It comes to the same support, tries to come back up but bounces from that trend line. So if this was the highest place, this is lower than the previous one, and this one is lower than the previous one. The next one, which is this, is even lower than the rest. Then we expect in the future price to come to the same trend line but should not break above it. So if you want to trade this one, the correct way is to wait for price to come back up, and anytime you find that along the same trend line there's a key level, then that's the correct place to trade from. Like you'll find that this is a support, there's a break below, a resistance, it proceeds down. If it should come back to the same place, then notice that while the price is here along this trend line, it's the same time it is bouncing from this trend line, then that's the correct time to pick a sell. So whatever you're seeing now, this could be a very good level, but it's not as good as when the price comes back to this place. This is just a resistance, there's a false break up, a support, a resistance, then we see a break up, price comes back but is yet to bounce from this line. So assuming the price does not close below, instead it bounces back, then we expect it to proceed even higher to this point where we look for a sell to the lower side. This is what you look at. Anytime you find a downtrend and you don't want to use indicators, then look for higher lows. I hope that should be clear that anytime there's a trend, we find that the trend is downwards, you look for this, look for higher lows. And the opposite is true for an uptrend. Anytime the trend is upwards, you should look for higher lows instead. Something like this. So I didn't mention that when I was mentioning the trend in the first case. I want to just say it now. I'm going to delete all this first because we've already looked at that on the live chart. So in an uptrend, something like this will happen. The price is going to move up, then it retraces to the lower side, then it proceeds even higher, then retrace again to the lower side, then it should move up before we see a retracement. Just a second. So anytime, assuming you're on this chart, then notice something like this happening, that the price goes up, it retraces, but this retracement is smaller than the main move. This actually just a correction. It corrects itself smaller compared to the main move. Then know that we are still upward. The price proceeds higher, we see this retracement, then it proceeds even higher, then instead of retracing just slightly, you see a main retracement, then it starts to go up, but nothing is happening. It does not go above this highest high. This could be a sign that the trend is ending. It does not confirm that the trend is ending, but it is a sign that maybe the trend is ending. So as I've mentioned, you need to mark the highest place the price reached, which is there, and also mark the lowest place, which is there. So this is just a resistance. Price goes down, it begins to consolidate. Your job is simple. If the trend was upwards, don't find yourself buying here, buying there, or buying there. Instead, wait for price to rise above this consolidation. Then it should retrace slightly back to that place so that you can pick a buy in the direction of the trend. So this is just one way you can know that you're still continuing upwards. If you find consolidations within a trend and price breaks above them, that is in an uptrend, then know we are continuing upwards. So I mentioned something while I was looking at that downtrend. I want to mention the same thing in case the trend is upwards. So observe this move. We have a move up, then there's a correction. I'll mark down here. This is the lowest low we can see on this chart. The lowest low. Then price proceeds up, then it comes down. This is now a higher low. This is a higher low. Then price proceeds up, then it comes down, and then you see another higher low. And then the price consolidates, but then there's no lower low. You still find the price being supported by the same initial support. So you wait for price to break up, then it retraces, and this is another higher low. So as I've mentioned in an uptrend, in a downtrend, sorry, when the price is going up, you should focus on the lowest place getting higher. Like this, the lower low, it proceeds up, then it makes even a higher low. Then it goes up, proceeds down, and it makes a higher low. Then we find that the price has gone above the area where it was consolidating. This is a sign that the trend is upward. So if you are not using an indicator and you observe this in a chart, just know we are continuing that direction. You should be buying, especially when price breaks a high, the recent highest high. Like in this case, assuming you saw this as a high, then the price goes above it, retrace back, but does not go below this level. You're supposed to pick a buy from this point. Then in the future, price goes above the recent highest high, which is this. Retrace back, is supposed to pick a buy from that point and expect price to proceed even higher. So I want also to look at this from the real chart, and we'll go to CardChef. I found one good example from that. CardChef is here, and I'll move straight to the weekly chart. Observe from this point here upwards, something like that. So there's something which I mentioned while I was looking at how to trade trend lines. I mentioned that the correct trend lines are supposed to be drawn on the highest highs or the lowest lows. Like in this case, I'm drawing it here for the example's sake only. but the correct place to draw them should be at the tip. You should pick that tip, and then also ensure that that line is passing through that tip, and it should pass on through another tip, not on the bodies. So that's the correct way, because if you are to scale, if you are to go to a lesser time frame on this set, you'll find that these were actual candles, not tails. So I want to use this as an example, and in that case I'm going to draw it there, the bodies instead of the tails. So as I've mentioned, we have a support, price goes up, then it comes down, and the same place becomes a support. We have this one, a support. We also have this as a support. Then we also have this as a support. Then for the first time, the same place we were buying from has actually been broken to the lower side. So this is actually not a change in trend. It could be a false break, which means the price should return back to the same trend line, so that we can pick a buy upwards like that. So notice from this point here, this is the lowest low that we saw on this chart from 2015. Lowest low. Price proceeds up, comes back to the same place, the same trend line, higher low, then it goes up, comes this. I've drawn this. I hope this should be in line with whatever I've just drawn now. As you can see, the price moved up, then it retraced back but failed to break this trend line. So as I've mentioned, you find that the same place is holding, but instead of getting lower, it gets even higher as we proceed. Like this is the lowest place we saw. This was in 2015. Then the price went up, and notice this is a clear level. So the price forms a support here. It goes up, comes back, but gets supported. It continues up, then comes back and gets supported. Then it proceeds up, comes back, gets supported. Then we see this as a false break. Now what you want to happen is for price to come back to this trend line, but should not break below, so that you can pick a buy. So if you look at this chart and don't add an indicator, then observe things like this. Look for highest lows. Like you see the price is forming a lower low, it goes up, higher low, another higher low. This means that the trend is upward. So you're supposed to look for a buy. Whichever strategy you're using, it has to be in line with the uptrend. So there's another indicator. I'll add an indicator now to at least to confirm that the whole move is upwards. And I'm going to use a different example, different chart. We'll add SP500 here. So another thing which I've not mentioned here is that trend is the most important thing. In any chart, you need to know the trend. So if you want to trade this one, just look at how this chart has been moving. From this was back to 2008. The price has been upwards. You see a move up, retrace it moves up, there's a retracement, moves up, a retracement, and the same thing happens until now. We are still just upwards. So it is better to trade charts like this. If you find a chart where the trend is clearer, then just stick to that chart. get your key levels. Like you'll come to a chart like this, you develop a key level, get a clear support or a clear resistance, wait for price to rise either above it or should bounce from it, then you trade in direction of that trend. Like in this case, I'll wait for price to retrace back to this line so that I pick a buy. Another thing, I'll wait for price to either rise above this one, this level, so that I can buy it in direction with this trend. So we'll add an indicator here, and this indicator is called average directional movement index. It's a trend indicator. There, the period should be the same, just use period 14. Before I explain it, I want to state how this indicator, this is called average directional movement index. You can see it at the below, it's on a different window. So how it works is this: it has three lines. This is the main one, which is complete, and then you have the dotted one, which is green, and then you have the red one, which is red. So in some cases you'll find that the green one is above the red one, and some cases the red one is above the green one. Here, just the same way this candle looks, anytime you see the green dotted one above the red dotted one, then that's an uptrend. And anytime the opposite is true, then that's a downtrend. So in this case, from this point here, we find that the green dotted one was above the red one. That means there was an active trend, and as you can see on the real chart, we have an active trend upwards. Then we'll look at an opposite case here. We have this one. From this point, from that point to this point, we have the green dotted line, the red one being above the green one. This means that the overall trend should be downward. So anytime you find a chart where the red one is above the green one, then that means the trend is downward. You're supposed to look for a sell. And to confirm that the trend is actively downwards, this main line, which I've not explained, should be above 25. There's a level here. I hope normally it's never there. You need to come manually and add it under the description. When you are loading this chart, there's this box that appears. The first one is parameters, then colors, then we have levels. Under the levels, you need to add it, and the level should be 25. So after you add it, it appears on the main screen, which is like this. So to trade this correctly, ensure that the main one, which is complete, is above 25. Then the green one or the red one has to be completely above the other one. In this case, whatever is happening currently, that's not true. We have the red one, the main one is slightly above 25, and the green one is also above the red one, but we're not seeing any clear move upwards. That means that before you trade it, wait for a retracement back so that you end at least risk, then you pick a trade to the upper side. So you cannot use indicators alone. We have to at least gauge whatever is happening on this side, because if I use the indicators alone, I may not see this as a trend to the upper side. Assuming I'm only relying on this indicator to trade, then I'm likely not going to buy this. But if I combine price action with the indicator, then I see this as a support, and therefore a very good place to buy from. So you'll find that the same thing which I was saying is true. This is just a support. If I'm using price action, a reason like this a support, the lowest a lower low, then price proceeds up, we find a higher low now, then it proceeds up and we find another higher low, then just recently there was a higher low which formed around this point. So I may not be able to draw one straight line from this point to the rest. It's fitting, so it's still okay. It's fitting. As long as it can fit, you find that this is a support, a support, a support, then this was the best place to buy from. And don't forget, in the future, if price comes back to it, assuming you find a move like this, the price retraces back like this, then this will be the correct place to buy from. That is in the future if price comes back to it. And even this is going to be a lower high, a higher low, sorry. So as I've said before, in an uptrend, you focus on the lows getting higher, and in a downtrend, you focus on the highs getting lower. In this case, this is the lowest low, lower low. Then we have a higher low, and then we have another higher low. Then we have this one. In the future, we expect it price to come back to this level, but should not break below it so that you can pick a buy to the upper side. I mentioned something that if you want to, assuming you don't buy it, assuming I didn't buy it while price was retracing here, you should wait and buy the next one. And if you don't buy it here, then wait for price to break above the highest high, the one you can see, which is this. Wait for price to rise above it, then it should retrace slightly so that you pick a buy in the direction of that trend. I hope this should make sense now. This is how you combine time frames with indicators, and this is how you can combine price action with indicators. You should not use the indicator to determine when you are selling or buying, but just understand what's happening on the chart first, then check if the indicator is confirming whatever you already know from the chart. Like in this case, I'll come and draw a level like this. I'll draw a line, then find that the overall trend is upwards. Then I'll now add an indicator to confirm that we are indeed upwards. So if that is true, if you find a good level and the indicator is supporting you, and you find a key level on the chart, then just know you are correct. There are high chances you are correct. So we move to the next one, what you're supposed to look at. So far, we've looked at finding trends using indicators. We've also looked at finding trending markets using price action. Whatever we've not looked at now is pin bars, engulfing candles, and inside bars. So this is what I looked at last week. I mentioned something about this last week, and I want to repeat it here now. Just a second, I get the screenshot on the screen. Yeah, so I hope you can see it. Anytime I mention something like a pin bar, this is what I'm referring to. A pin bar is just a candle that has a long tail on one side but a small body and no tail on the other side. So in this case, this is a bullish one. You find there's a tail, but there is no tail on the upper side. You have a tail on the left side, but there's no tail on the upper side. Just a second. So we check a real chart. Let's look at it from a real chart, because getting the screenshots it's getting difficult. We need to get them on the real chart instead of the screenshots which we have already. So this is an example. This is an example of a pin bar. This is an example of a pin bar. You find that there's a long tail, but the body is very small. Then we have no tail at the top. There's a small tail. So anytime if you find that there's a small tail, but that tail is nothing compared to the tail on the other side, and the body is also smaller, then that's a pin bar. So as I've mentioned, you know you're supposed to buy from this point, you're supposed to buy from this point, you're supposed to buy from this point. Sorry, you're supposed to buy when the price is here. It goes up, you're supposed to buy when the price is here. It goes up, you're supposed to buy when the price is here. So whatever you choose to trade, whether it's a pin bar, engulfing candle, or inside bar, whichever candle, or even a dark cloud candle, that candle must be appearing around this level. So the most important thing is to understand that we are upwards. Then you know very well that if you are upward, these are the correct places to buy from. So that means before I buy here, I look for that my candle, whichever candle you choose to trade, it has to be occurring along this line. Something like this. We have a very good example at CAD Chef JPY, not CAD Chef. Just look at this like this. I'll minimize that. From this point upwards, sorry, from that point, like that. So look at this chart like this. We have a resistance, price went above it, came back to the same support, it went up, then down, it went up, then came back to the same support, went up, then back to the same support, and now we're seeing a pin bar. What this candles means is that this is the correct place it's supposed to trade from. So because we've been forming higher lows, this is the lowest low, price went up, a higher low, then it went up, then for the first time we saw this move. So this temporarily disregards what we are looking for. Assuming this low was this candle here had a low which only reached somewhere here, and then the next one was a pin bar, but the low was above the previous ones, then this was the best place to buy from. So another thing, other than these trend lines, focus on levels that appear voluntarily. Like if I'm looking at this chart, let me draw a line here. You can see that since when this was 2015 until now, the price went below this level, it has not been able to come back above it. If you find levels like this that has been holding for the longest time, then those are the levels to trade from. Don't come and find yourself drawing a level here, then you say this are resistance and you want to sell from that place. The correct place should be at the very top, which is this. So you wait for price to come back to that place, you pick a sell. It goes down, you wait for it to come back, you pick a sell. Then it goes down, comes back, you pick a sell. Don't find yourself selling anything that somebody may come here, then they draw a line like this and then say this is a support, a support, a support, a support, a buy place. This is correct, this is okay. But just ensure that wherever you choose to trade, it has to be a clear level. Somewhere you're not struggling to get that trade. Like this, we have a support, then there's a break. You can see it's holding. And in case the price gets back to that place in the future, then that will be the correct place to sell from, not somewhere in between. We sold here, and we sold here, then we sold here, and we also sold here just recently, and we want price to come back again in the future to the same place so that we pick a sell. The best thing to do is, normally if you want to draw a clear line, draw it from this highest time frame, either this or monthly, and that place has to be very clear. Just look at the way this chart is clear. You can literally see that anytime the price approaches this place, this is going to be a sell place. This is another example, gold. Gold should be here. Gold is there. We add it. Look at it from the monthly point of view. We start with the monthly. So I have a level here, there. I also have a level at the very top, which is this. Notice from this was 2013, price went below this level, it came back, resisted, it went down, the same support, the same resistance, goes down, resistance, 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 and if price can get back to the same place, then this should be the correct place to sell from. Don't sell anything unless the day that the price comes back to this place. And you'll see, if you go to the weekly, you'll see that there are signs that the price is proceeding even upwards. There's a move up, then a slight retracement, we go up, a slight retracement, up, a slight retracement, it goes up, and now we are seeing pin bars that are pointing upwards. What this means is that the price is likely heading towards this resistance. This is just a very good resistance, there's a false break, a resistance, a resistance, a resistance, a resistance, a resistance, and we want price to get back to it so that we can sell it from that point. If you look at this chart at the moment, then just expect price to be upwards, and you should sell it from this point, from 1355.68 and 1348.79. I hope that should make some sense. There are certain things that I mentioned there, but I've not looked at them. I've mentioned something like dark clouds. I've not looked at this. I've partly looked at breakouts. So the rest we'll look at next time. That should be enough for today. We've checked just everything you need to look at. We've looked at ways for finding trends. We've looked at how to find trend using indicators, then how to find trend using price action. Then I also tried to explain how pin bars can be used to enter trades. And I'm going to repeat this just for the sake of it. Assuming I look at this chart here, the one cut chef, then you've known that the trend is upwards, and you also know that the lowest place we expect price to go up to is along this trend line. Then that same place where the lowest place you expect price to go up to, that's the same place you should be seeing whichever candle you want to trade, whether it's a pin bar, engulfing candle, or inside bars. They have to be appearing here. So you can see there's a pin bar which occurred at this point, but instead the price went below it, came back up. So this is a bad case. You actually stopped if you bought it. Should price get back to it now, then we're going to buy it, but with our take profit here, 0.7881. So that's just one example. We also have this one where you find a level, you know very well the highest place price should go up to is this trend line. So when the price gets to that trend line, you need to see the candle you want to sell or buy when you see it. So you don't sell here, wait for price to come back up to this trend line. Then if there's a pin bar that is pointing in the direction of this trend, then you trade it. So that should bring us to the end of today's webinar. We've looked at just basically everything you need to look at. See you again tomorrow at 12 GMT noon.